How to use trading patterns properly. Hi, I'm Tradiology, and I hope you're doing well. Before watching this lesson, I'd appreciate it if you could like the video and subscribe to my channel. Alright, let's get started. Trading patterns are shapes formed by candlesticks. Their main purpose is to help us enter trades with a high probability of success after the pattern breaks or consolidates. Some patterns don't even require drawing any lines, like the double bottom, double top, or head and shoulders patterns. These are visual patterns, and you need to see them repeatedly on charts to master them. So, how should we use them correctly? In this lesson, I'll show you the best way to use trading patterns so you can identify them more easily and enter high probability trades without hesitation. Please pay close attention and consider watching this video more than once. If you've followed social media trading content, they often just tell you to draw the pattern and enter on the breakout. But they don't teach you the real tricks. So let me show you my approach. As always, the first step is to draw your support and resistance levels. This helps you understand where you are on the chart and what the likely direction of price is. It also helps you avoid buying at resistance or selling at support just because a pattern breaks. The next step is to identify the direction of the trend. Is it moving upward or downward? Let's say we're sitting on a support level, and price is moving upward strongly. This likely indicates that price could reach the previous resistance level, not guaranteed, but likely. Now that we've identified our levels and the probable direction, we need a reason to enter a buy trade. One of the best reasons to enter is spotting a trading pattern. This is where the real use of trading patterns comes in. We look for a clear pattern in an area where the odds are in our favor. Let's say we spot a double bottom pattern. The best way to enter on this pattern is to wait for the first pullback. Price fails to break the previous high and pulls back again. This gives us a clue that a double bottom might be forming. And since our bias is bullish, this could be a good trade. One of the best entry methods here is to wait for a bullish engulfing candle during the second pullback. You can place your stop loss a little below, and as I've always said, determine your target based on your backtesting. Now let's look at another example. Price is in a trading range. Based on our previous video about MTR setups, if we see one form near resistance, we can anticipate a change in market direction. So if we get an MTR pattern here, it suggests the trend is likely shifting from bullish to bearish. This gives us a great opportunity to look for bearish patterns and sell setups. Also, not every pattern needs a name. If you just see compression or consolidation, draw your lines and trade the breakout. Don't tire yourself by memorizing names. My goal isn't to turn trading, which is a practical skill, into a purely theoretical subject. From now on, every time you see compression, don't worry about its name. Just draw your lines and wait for the breakout. This will simplify trading and likely improve your long-term performance. Here's an important point. In every video I make, I talk about trading psychology. Do you know why? Because trading psychology isn't something I can teach in a few separate videos. It needs to be integrated throughout your learning of technical analysis and risk management. That way, you can better understand how everything connects. Now you might ask, how do we use reversal patterns like the head and shoulders? Great question, let's break it down. First, ask yourself, where do we expect price to reverse? Obviously, at key levels of support and resistance. So the best place to use a reversal pattern is right at those levels. Look at this example, price hits a resistance level. If we're expecting a reversal, this is the perfect place. Wait for price to move up again, then pull back and break the previous low. If that happens, look for a good candle during the pullback and take your trade. This large pattern is called a head and shoulders. But let's go deeper. Zoom out, can you see this as a trendline break? That means it's actually an MTR setup. You can enter on the pullback after the trendline break. So, the head and shoulders pattern is essentially an MTR. Then why do people give it different names? It only makes traders more confused and complicates the process. Even with continuation patterns, you don't need to memorize names. You can if you want, but it's not necessary. As a trader, just understand why consolidation forms and how to trade it. That's enough. And here's one final, important note: patterns create expectations. For example, if price is trending upward and you see a triangle forming, which is just consolidation, your expectation should be that price breaks upward. If it breaks down, you don't need to take the sell because the main trend is still up. To sell, you need a proper MTR setup. I hope you enjoyed today's lesson. If you liked the video, please give it a thumbs up, leave a comment, and subscribe to my channel. Also, share it with your trader friends. See you next time.